Into the bank you go. A paycheck gets deposited. There's a smile from the teller. Right then, the app changes. Numbers shift. What you gave them already moved elsewhere. Nobody took it. Nothing vanished. It simply isn't stored away like you imagine. Most folks ignore this fact completely. That pile of dollars, never waiting behind a locked door marked with your name. Something is already shifting. It stopped being still ages ago. This moment holds weight, maybe more than any recent one. Relying on financial institutions seems natural. That comfort vanishes fast when tested. Looking back a short way helps. The truth hides beneath what we assume must be true. Picture banks as places where money sits idle. Not true. These spots act more like factories. Cash goes in, gets moved around right away. Nothing stays put. What you hand over turns into fuel. The machine keeps running because of that. Safety isn't the main job here. Movement is. Your stash, already working elsewhere before you even leave. Picture this. Put $1,000 into a bank. They won't just stash the whole amount away. A piece stays on hand. Most of it travels, lent to someone opening a shop, or handed to a person securing a roof over their head. Flows between banks too, even reaches public coffers now and then, not hidden at all. That system has a name: fractional reserve banking. Banks hold just a fraction of each dollar you deposit. That share depends on where you live and local rules. Still, the idea works everywhere alike. Your cash moves out into loans and investments, not gone, just spreading through the economy. This process repeats, growing larger over time. A single dollar circulates, reused across loans, purchases, property, fueling expansion. Numbers suggest plenty. Truth? It holds together because of timing. Here's what matters. Every account holder thinks cash sits ready whenever needed, instantly. Yet that trust stands only when withdrawals stay scattered. Most days, people wait. Routines continue. Wages come in, expenses move out. A quiet whir comes from the machine behind the scenes. Only when trust wobbles does tension rise. Then numbers start stumbling. Break it down cleanly. 10 individuals put funds into an account, while loans go out based on that sum. Operations keep moving, so long as withdrawals stay rare. Yet what happens when every single person arrives together? The drawers come up short. It has nothing to do with greed, nothing to do with failure. It simply wasn't built for moments like these. What looks like weakness is actually working as intended. Efficiency matters more than caution here. Cash sitting still gets moved to keep things running. Growth feeds on motion. Strangely, the whole thing holds up only when left untouched. What goes around comes around, history shows. When markets get shaky, folks start pulling cash fast. Needing it right then isn't the reason. Worrying that everyone else might pull theirs first, that is. One fear piles on another. A bank failing? Rarely just about bad bets. It's often about speed. The money hasn't vanished. Debt still sits on the books, just stuck, too far out, too hard to reach quickly. Short-term promises make up deposits. Danger hides in that gap. Banking today works to ease the threat. You get told your cash is safe by insurance. When trouble hits, central banks step in. Backup systems wait nearby. It makes a difference, really does. Still, nothing alters the heart of it. Your money does not just wait around doing nothing. Through the network, it travels. Here comes a part that feels odd. The majority of currency now has no shape. It exists as digits, as records, as promises owed. Lending doesn't involve passing stacks of pre-existing bills. Born from borrowing, cash shows up as a loan here. Over there, it takes shape as a deposit. One leads to the other like footprints in snow. When things are steady, the system hums without strain. Debt gives rise to what we call money, yet it rests on belief stacked over more belief. Stability comes from debtors returning what they owe. That relies on the economy working well enough, and that only holds if people still believe. So governments watch banks closer than almost anything else. Funny how fragile it all can be. Happens every few years like clockwork. Back in 2008, vaults weren't empty. Banks had plenty held on paper. Truth was, belief evaporated overnight. Nobody could tell real commitments from hollow ones. Lending shut down fast. Cash disappeared into thin air. Suddenly, giants built on strong foundations crumbled before sunrise. Lately, some strong banks collapsed, not from risky lending. Movement did it. Money races faster now. Digital tools like cash vanish in seconds. This feels different. Before, fear meant crowds at doors. Today, one click empties accounts. Rules still lag behind. Here's something else few notice. Connected deeply, your bank doesn't stand alone. One lends to another, forming chains across the system. Shared markets tie them together. Their holdings often look alike. Trouble in any spot can move fast. Here's where central banks get involved when things go wrong. Not because they care about bankers' bonuses. It is about stopping the whole system from breaking apart. Trust between lenders vanishes fast in panic mode. Once that happens, cash movement freezes up completely. When payments stall, so does hiring. Business slows down next. Even tax income drops soon after. When folks claim the funds are secure, they're really saying one thing: the setup aims to function. Usually. Truth be told, money does not rest still in storage. It moves through a large, delicate balancing act.
Here lies the subtle irony. Should every person insist on total protection, zero loan, zero chance, the financial flow stops, progress halts, chances disappear. What keeps us uneasy also fuels progress. One pushes forward while the other holds back. Banks balance on a thin hedge. Regulators do too. Central banks, same tightrope. You, even without noticing. Drop cash into an account, it isn't merely saved. Something moves behind the numbers you see. Power shifts when nobody looks. Faith keeps it running more than rules do. Often, things work just fine. Other times, cracks appear slowly. Safety isn't the real issue here. It's what breaks quietly so everything feels smooth. When the screen flashes your updated total, clean, fast, seamless, pause for a moment. That figure, does it track your cash? Really? Could be nothing more than a quiet hope tucked into code, banking on you never asking for everything back in one go.